And we're recording now. So my name is Jamie from Gerald Thomas Chartered Accountants, and I'm joined by Luke.
Hello, Jamie. Hello, Fran.
How's it going?
Yeah, very well, thank you.
And Fran as well.
Hi.
Do you want to just do a quick introductions of what you do?
Yeah, no problem. I'll kick off. I work in the corporate partnerships team at Moneycorp. We're one of the largest non-banking FX providers globally. We're obviously working with Gerald Thomas and Funding Circle in partnership. So it's good to catch up today and have a discussion.
And I'm Fran. I head up the partnerships team at Funding Circle. So we're a small business lending platform who have lent to around 81,000 businesses now globally. But more relevantly, I suppose at the moment, we're also supporting businesses with the impact of COVID over the past few months by delivering the CBILS scheme, which I'll talk about later.
Okay. And my name's Jamie, like I said earlier. I'm a tax associate at Gerald Thomas Chartered Accountants. We're a full-service accountancy firm. I specialise in the tax side of it. A lot of the work we've been doing recently is supporting clients around what government support is available and things like diversification of their businesses. And sort of before we started recording, we were sort of talking about various different things. And one of the things is obviously the impacts of the pandemic and subsequent lockdown on UK businesses. I think we've all seen that there has been a significant impact there. Now we're looking at a potential release of the lockdown rules, particularly in England, maybe slightly behind in Wales. But just from your point of view, Luke, from Moneycorp's point of view, what are you looking at in terms of the current landscape and general feelings about where we're going in the next few months?
General feeling at the moment for me, it certainly feels a lot better in the last 2 or 3 weeks than prior to that. However, the government have thrown the kitchen sink at this, haven't they? Right from the beginning. In fact, it almost feels like they've been up and down Downing Street, ripped out the other kitchen sinks and thrown those at it as well. And to be fair to Sunak and the government, I think we've got to give them some respect for that. That's obviously really helped businesses. So in that regard, I think we're starting to see the fruits of that labour. But you know, they built up just a huge amount of debt, and you'll probably be better positioned to speak about this than I. But the debt's going to have to be paid back at some point, which is going to be a huge cost for businesses and individuals across the market. People are talking about will there be a V-shaped recovery, you know, a real strong bounce back. I'm just not so sure. It's that was sort of muted near the beginning of the lockdown, but it does feel to me that it's going to be a longer, more drawn out recovery than probably first thought. Let's not forget that Brexit negotiations are still ongoing in the background. I mean, this was what everyone was talking about right a few months ago, and suddenly it's just gone deadly quiet for obvious reasons. It's still ongoing. But as it currently stands, the UK is going to be leaving the European Union at the end of this year. I saw reports that David Frost, the UK negotiator, is negotiating well with Barnier in Brussels. They've reportedly made some concessions over the fishing rights, etc. So that's all good news. But we've got a deadline coming up end of next month. So just looking away from Covid-19, the deadline end of next month is whether we're able to extend the negotiation time frame beyond end of the year. Will this happen now because of the pandemic? We just don't know. And for me, uncertainty across the board remains, which is tough for businesses. And I guess, Fran, from your perspective, what have you seen as the challenge or the main challenges for UK SMEs in the last sort of few weeks, months? I know we're having conversations, you know, more around transactional things, but it'd be interesting to hear what you're getting, what kind of feedback you're getting from clients.
Yeah, absolutely. I mean, so we're a small business lender. We've been delivering small business loans now for 10 years in the UK. And so I've seen, a lot of the, requests from small businesses in terms of what they need and what those funds go towards. For us, we've seen an obvious, very sudden and significant impact to the small businesses that we support and obviously a growing number of those over the past few months, for obvious reasons, across all areas of their businesses. So, trade, finance, people, but they're all sharing common challenges that, we see in terms of limited cash flow, reduced trading, furloughed staff, and most importantly, an immediate need for funds or working capital, but they're facing long waits for both decisions and for actually receiving those funds. So, for us, what we've really been focusing on is what we do, is what we do best really at Funding Circle, is delivering decisions and funding quickly. Because at the moment, very understandably, businesses are, in need of that type of support to keep their businesses above ground through this period, so that they can come out of the other side and then continue to grow. So that's really what we've been focusing on. But it's interesting you touched on the debt that obviously the country is going to be facing in a few months, or 12 months time. And updated figures from the Treasury this morning have said that the bounce back loan scheme has now lent 18.5 billion to 600,000 businesses across the last 2 months, and the business interruption loan scheme has now lent over 8 billion since its launch in March, and that's obviously just in 2 months. So, for us, there's some really positive side to that, in that many businesses have received the funds that they needed, and to think how many of those wouldn't still be surviving if they hadn't had those funds. But also obviously there's lots of interesting questions that comes alongside that too.
Yeah, definitely. In a sort of similar fashion. I mean, we look after, on the other side, we look after sort of their accountancy and their financial side of things. And what we've seen with various clients is, yes, these schemes that are available from the government, the furlough scheme has been very, very important, being able to carry on paying employees while they're out of work, when they would have been made redundant, and employment figures would have gone through the roof if the furlough scheme was in place. You mentioned the figures there on the bounce back loans, well, how much has been paid out, and we're seeing three main areas where these are being put to use. One is where there's an immediate cash flow problem within the business, and it's become it's a very quick form of debt funding to get through, and because of the interest and repayment free terms for the first 12 months, and then only a 2.5% interest rate across the next 6 years, it's a very cheap form of lending. So that often it's the first port of call to get some quick money into the business. We're also seeing businesses where they maybe don't need the cash at the moment, but they are foreseeing that, as we come out of the lockdown, as they bring staff back, and as they need to increase their supply chain, they might not be able to get the credit terms that they've had with suppliers in the past, because everyone's trying to get cash in as quickly as possible. So they're saying they're going to keep it behind, to go in towards the working capital when it comes to starting off the trade again. And there have been others where they have sort of had an idea about a bit of diversification in their business. Their main source of income has sort of dropped a little bit now. So they're seeing this as an opportunity to use the funds and to invest further into the business, to try and pay that back many times over in the course of the 12 months. And that's where we see the main areas. I've also seen, unfortunately, some posts online about people saying, can I get a bounce back loan and then liquidate a company? And unfortunately, there are going to be people who try and do things like that.
Yeah, it's interesting what you touched on there about the supply chain. Obviously, for clients that we work with, certainly internationally, supply chains are key. And one thing we saw, I remember having conversations right back at the beginning of the year when this was just arising from China, and it hadn't really impacted our shores at that time. But businesses were talking about it even back then, but suddenly they just weren't able to import the same products, materials that they were a month or two ago. And some businesses we were speaking to were lucky. They'd stockpiled, they'd overbought previously, so they were in good shape. Others hadn't, and for us, we've really seen businesses struggle on that front. It was a real case of battening down the hatches at the beginning, the fear and panic settling. That said, I don't know whether you guys are having the similar conversations. There's definitely been a positive a shift in mindset, I think, in the last couple of weeks, where this tends to be I think businesses are getting used to the new normal. I spoke to a business owner yesterday in the digital marketing space, and she said, actually, yes, at the beginning there was panic, there was fear, but actually there's been quite a bit of positive that's come out of this as well. So I'd be interested to hear from both you guys if you've had sort of positive conversations like that with clients or other people in your network.
Yeah, definitely. There's been a few clients we've spoken to who have done a number of things. So they're reviewing their current workforce, and we were speaking to one this morning actually, and what they were saying is that they've had to furlough a number of staff members because there was a decrease in the amount of work that needed to be done. But what they've realised off the back of that is they're actually getting more done with a smaller team than what they were doing with the larger team. So there was some inefficiencies in the processes there, and this has forced them to see where those inefficiencies in their systems and processes lie, in sort of chewing the fat off when they've got a lean team trying to get the same amount of background work done with less people. I think that's going to come across a lot within businesses. I mean, there's going to be lots of businesses who were reluctant to let staff work from home before this all happened, and now that they've been forced to do that and they see that it works, and in many cases, productivity often increases when staff then get to work from home. There's less distractions and more freedom and maybe more ownership of the work they're doing. Yeah, it doesn't work for everyone, of course. If you've got young children at home, it's difficult. But we're seeing things like that are really, really looking promising, and businesses really working on their systems to make them slicker. We've also seen some, diversification in not massively shifting the business, but just doing things slightly differently, appealing to slightly different audiences as customers. And the people who are doing this, sort of looking at it, not going the first initial panic, but then after the initial panic, looking at the current landscape, looking at what it's going to be, and trying to bring the positive out in that. And that sort of mindset is going to be key then in coming out of this stronger.
I think even for me on a more personal level, this whole thing has gone in phases, and I think at the start everybody was talking about when we come out the other side or when we go back to normal. And I think now that we're all starting to change the language there in terms of, I've heard a lot of talk about the new normal, or, as we come out, in a different way from this. And I think that for me, it's like that for myself, and also for the businesses that we're working with. I don't think anything will go back to exactly how it was before. And we're all slowly realizing that, at our own pace. And we saw the same with businesses that we were talking to. I mean, we'd started delivering the business loans interruption scheme from the end of April at Funding Circle. And so obviously, end of March and early April, lots of conversations with businesses in pretty desperate need at that point across the board, going to lenders like us and to their banks, trying to find an option where they could get funds quickly and just keep going. Whereas now that the schemes have been launched and businesses are starting to be able to get access to those funds, are now able to think a little more strategically and a little further in advance than just, I need to get as much money as I can to just keep this ship sailing, which is great. I mean, it's great for us, and it's what, it's really satisfying for us to be able to be delivering these loans now and actually sort of having a tangible, input into helping those businesses to continue.
You talked a little bit about the business interruption loan scheme there, and then there's the bounce back loan. Do you want to just give a brief overview of what each one's are and why they're different to each other?
Absolutely, and I think to frame that, it's very understandable right now that many business owners are a bit overwhelmed and confused between which scheme is which and which one's best for them, which is a conversation that we're having many times a day, especially through my team, where we work very closely with partners. So, many accountants like Gerald and businesses like Moneycorp and some, business consultants, for example, who are looking for, information on what scheme is right for their clients. A lot of them are asking, what am I eligible for? Can I take multiple loans? Can I have one from one scheme and one for another? So I think the two most relevant perhaps are what is commonly referred to as the civil scheme, which is the business interruption loan scheme, and then the bounce back scheme. So the civil scheme was launched by the government in April, and then the bounce back scheme was launched at the end of April to address some of the issues around the speed of businesses being able to access the civil scheme. But to clear up the difference between them, and to put it really simply, the bounce back scheme is available to small businesses who are looking for funds between 2,000 and 50,000. They're able to access those funds very quickly via a number of different lenders, including the banks and a lot of peer-to-peer and challenger banks as well. The civil scheme, which is what Funding Circle is currently delivering, is for small business owners, and it's a simple loan that can be with us between £50,000 and £1 to take it over the bounce back category, up to 250,000, but it can also be above that 250,000 with another type of lender. So businesses can actually apply for up to 5 million through the civil scheme as well. But the key thing with both of them is that the government pays the business owners interest and fees on those loans for the first 12 months. So again, to sort of talk about what I'm working on, we are delivering these loans from 50,000 upwards with no fee for the borrower for the first 12 months of that loan. So really accessible way of a business kind of getting that support in an easy way. But I think that, I definitely recommend that anyone, that's interested in these takes a look at the British Business Bank's website. It's got some really good guides on there in terms of which scheme is which, gives the details of those, as well as a list of the 40 different lenders that are accredited for these schemes and which ones they're delivering, and a really helpful business finance guide, which is a great resource for SMEs looking to find out which one is right for them. But I think, to put it really simply, if you're a small business owner and you need very fast finance up to 50,000, the bounce back is probably the first point of call. But if you're likely to be looking for maybe multiple loans or over 50, the civils is a very good scheme, and it's a very accessible scheme as well.
I mean, it's pretty remarkable, really, isn't it, when you think about it, the links that the government have gone to help these businesses. I mean, as we, going back to the beginning, this isn't free money. Well, you say it's interest free for the first year, but it's going to have to be paid back at some point. But there is an element of, let's cross that bridge when we get to it.
Yeah.
At the moment, I mean, I suppose you have to weigh up what would have been the implications if businesses didn't get this funding. I mean, who knows? But you dread to think, don't you?
Absolutely, yeah. And I think, any of the lenders delivering this, they're all accredited by the British Business Bank. Many are, we for example are FCA regulated, and every borrower that draws down a loan with us is made fully aware that they are still responsible for that debt, and obviously they do start to repay that in 13 months' time. The government is backing they're backing the CBILS loans 80% to the lender and 100% on the bounce back loans. But as you say, the borrower is still ultimately responsible for that debt. So it's but like you say, it's an amazing thing, and it's something I never imagined I would see in finance. But it's great to see these businesses getting the support that they need.
Right, just quickly, just a question to pop to my head: is there a time frame on this? At what point will these loans stop? Will they stop? I don't know. It's just a question I just thought of as you were speaking.
Yeah, it's an interesting. I think at the moment, I believe it's till September.
Right.
But I mean, I've worked on government schemes before, actually in startup lending, and experienced that deadline being pushed in a normal environment. So this is more probably personal opinion than official, but I wouldn't be surprised if that is extended. But obviously, as we know, everything's changing so quickly right now, it's anyone's guess.
Cool. So maybe industry sector specific might be extended, I'm assuming.
Perhaps. Yeah, I would expect that might be the way it goes. Yeah.
Yeah.
Jamie, sorry, go ahead.
I was just going to say that what may end up happening, I mean, we know that the furlough scheme is going to run as it is currently running now until the end of June. And then at which point there is going to be a slight shift in the way it works. We don't actually know what that is yet. It hasn't been announced. But it's likely going to be two things. One is that 80%, part of it will have to be paid by the employer. So maybe the 80% gets paid to the employee, 60% is covered by the employer, 60% by the government and 20% by the employer. So it puts some skin in the game for the employer to make a decision on whether they're going to keep them on for a longer period of time or not. And in order to facilitate people getting back to work, I think it's going to become more flexible in terms of the employees maybe doing some part-time work, so coming back a few days a week, but still being allowed to be furloughed. At the moment, it's an all or nothing thing. So I think that might be something that's going to come in with the furlough. That's going to go then until October. So I would imagine that a lot of these schemes will sort of line up in terms of when they start and end, because they all sort of came in at fairly similar time, so they might sort of tail off around about the same time. But obviously that depends on how things progress in the next few months and whether they're going to be continued to be needed. If everyone adapts really well and businesses really sort of get a hold of this and start working well, then it might not be needed for as long as we expected. But if things continue to go badly, which are outside of control of businesses, then they might have to continue into the future.
Yeah, I think we're all assuming that we're going to come through this in the next 2 or 3 months, aren't we? Or certainly hoping that's the case. But like you say, the big fear is probably I'm reading the same articles as you guys. Of a second spike, a second wave, whatever you want to call it, and that's the big fear, I guess. We shall see. But it's good to know. Thank you.
I think going back to sort of where we first started, and I think we sort of talking about the macro climate and how that sort of linked in with Brexit. Now, I know we're talking about the future, and this is sort of pure speculation, but the government are going to have to be purchasing. The Bank of England have been purchasing a huge amount of gilts from the government. Therefore, getting the money out into the hands of the individuals and the businesses in the UK, and that means that there's the increase in the national debt, which often gets repaid via increased taxation. I don't know if you've got any thoughts on whether you think this will happen, and in any areas which you think might be targeted. Ooh. I know it's pure speculation. This is just sort of finger in the air. Let's have a go.
Yeah, I don't know. This is probably your area of expertise, isn't it? I don't know. I mean, luxuries, I guess. I mean, I suppose they'll look to target all the items that they would do normally. I assume. tough one. I don't know.
Yeah, my sort of view on it is, and this is again my views, my speculation, is that it's going to be extremely difficult to increase any headline rates of tax, particularly with the current government. You know, if there's a change of government in the future, we don't know, but the current Conservative government is ran on a low tax platform. So corporation tax, I can't see being increased. Yes, they're going to stop the reduction to 17%. Income tax rates will be difficult to put up, and VAT as the headline rate would be difficult to put up. So those are the three sort of main taxes that people see, but there's lots of other taxes in the background that people don't notice are going up. So we've got things like stamp duty land tax, for example, which has had a massive increase over the last few years with firstly the second home charge, and then the difference in the banding. We've got capital taxes, which are being already partially eroded. Entrepreneurs relief, which is you get 10% tax rate. It used to be on the first 10 million of capital gains that you made on, you know, on a business that you've grown. That's now, it's only the first 1 million, so that's already a big cut. And there were rumours before that budget that it was going to be scrapped completely. And then inheritance tax is due for a review. It's the Office of Tax Simplification will be making noises about changing the way that inheritance tax is administered. It's ridiculously complicated in some parts, and I don't know whether they try and simplify it, or the Office of Tax Simplification, every time they've got involved before now, they've made it a bit more complicated, not simplified it. But we'll see what they do with that. But that's sort of where I think, if there are any tax increases to pay down this debt, that's where they'll come from.
So quite a few then.
Yeah. Yeah, and they'll be the ones which don't make, you know, they won't make massive headlines. They'll affect a small number of people, which means they're easier to implement because you've got less of a backlash against it.
Yeah. So I guess businesses really, they need to look into this quite deep, don't they, and understand exactly where they think these extra costs are going to be coming from in the next few months, maybe years, to make sure that they sustain for the future. Certainly, I mean, from our perspective, we're seeing supply chains now picking up. Businesses definitely starting to get back to some normality with regards to dealing overseas, which is good. Just quickly, essentially for us, we assist businesses and individuals with any overseas payments they need to make. So if we can reduce costs on those individual payments for them, then hopefully they can offset that against other costs that are going to be rising in the future. And for me, it's not just about reducing costs; it's also managing the exposure as well, and trying to dampen those risks. Looking at every client's individual requirements and just making sure that they're set accordingly for when we hopefully start to break free of this nightmare. But for me, and I know, it seems to be repeating myself, I do feel that, that there is a positive mindset now out there from the businesses we're speaking to, that the worst hopefully is behind us. Now, whether that's naivety, I don't know, but fingers crossed there is some light at the end of the tunnel.
Yeah, absolutely, and it's the same from sort of our clients. Is the adaptive capabilities of some of the clients, and particularly some of the larger businesses, which you would expect would be, slow to change and to make progress on systems and other parts of income generating work. But certainly quite a lot of the businesses we look after have adapted very well. They've taken advantage. I mean, firstly, take advantage of the support schemes that are available. There's the furlough, the loans we've discussed. There are also various grants out there as well. It's definitely worth looking at those first. Then once you shore up your cash, look at how you can, dig in, how you can carry on trading through this, how you can restructure your systems, and how you can, trade in the new normal, as I said earlier.
Yeah. There's plenty. I've come across a number of companies in different sectors. Medical supply businesses, for example. This is, you don't want to talk about too much positivity because it's been a pretty tragic time. But there are businesses and sectors out there that have benefited from this. And there's, I spoke to a client the other day. They were on their knees 5-6 months ago, and suddenly because of this, their demanders, their issue now is that they can't keep up with the demand of their product. So there are success stories out there. I think it's important to remember that. But I think it's really also important for businesses nationally just to be fully aware of all the help and resource that they can get and utilise it. There seems to be plenty out there at the moment. Just talking to you guys, obviously, there's a number of things that we can help with. So fingers crossed. There's there is positivity ahead.
Yeah, I think should we wrap that up for today, guys?
I think so. All good.
Yeah.
Thank you so much, Jamie, for arranging.
No problem.
Yes,
Thanks for being on here. And what we'll do is, if you don't mind, I'll share your contact details in the bio of this video. So if anyone wants to get in touch with anything we've talked about today. So yeah, thanks for that. And see you later.
Thanks a lot.
Absolutely.
Cheers, Fran.
Thanks.
Take care.
Bye.